Namaste doston, I am Vikram and you're watching Market Insights with Vikram, where we talk about the market but always with a smart perspective.
The global scene today, honestly, has become completely unpredictable. Something happened that shook the entire market mood. Everyone is shocked. Traders, investors, even analysts all are asking the same question: what will happen on Monday? Is this just a temporary panic, or is something big about to start? Because the development that has come is on a completely different scale, and its impact won't just be limited to the US-China situation, it will ripple across the entire world, including India. In today's video, we will discuss a full breakdown of Trump's latest 100% tariff move, the real reason behind China's rare earth export ban, and most importantly, what impact this could have on India's market on Monday. We will see how global markets reacted, which sectors seem most vulnerable, and where there might be some safety. And yes, by the end, you will get a clear sense what to expect during Monday's opening and which zones require extra alertness. So make sure to watch the video till the end because every point is connected and the full picture will only be clear when you see the complete context. If you are a new viewer, don't forget to subscribe to the channel. Here you get a detailed analysis every day from pre-market to market close, valuable for any trader or investor. So, let's understand exactly what happened, because this is where the story begins. So, this just got real crazy. Trump dropped a total shocker, 100% tariff on all Chinese goods starting November 1. Yes, a full 100%. And the wild part, he said this will be over and above any tariff that they are currently paying, meaning whatever was already there, now there is double impact on top. Basically, this move is a direct response to China's latest step. They announced massive export restrictions on their rare earth minerals starting the same date, November 1. And these minerals, they are the backbone of the tech and manufacturing industry. Chips, batteries, defense components, everything. So now Trump retaliated too, saying the US will impose export controls on any and all critical software, basically a counterattack from the software side. It has become a kind of tech versus minerals war. And as always, Trump posted a long update on Truth Social. He called China a moral disgrace, saying their behavior towards other nations is completely unacceptable. He wrote that it has just been learned that China has taken an extraordinarily aggressive position on trade, and then explained how they sent an extremely hostile letter, basically warning the world that from November 1, they will impose export controls on all kinds of products, even some products that are not theirs. Like seriously, this has become a full-blown trade confrontation. Tit-for-tat moves from both sides, and now everyone's eyes are on November 1 because real action starts that day. Then Trump made it even clearer. According to him, China's new trade stance affects all countries without exception, meaning everyone will be hit, no one is spared. He said this is absolutely unheard of in international trade, something that has never happened before. And he also accused Beijing, saying they had planned this years ago, meaning the setup was ready in advance. Then he said, based on this unprecedented position, speaking on behalf of the US, America will now impose 100% tariffs on China. That's it, it's done. Interesting point, early in the morning, Trump hinted that some strange things are happening in China, as if he already sensed something big was about to happen. He said he himself was surprised by China's move and also made it clear he did not speak to China's president because, as he said, there was no reason to do so. And one more line from Trump. I was to meet China's president in 2 weeks at APEC in South Korea, but now there seems to be no reason to do so, meaning the meeting is likely cancelled and he seems clearly disappointed. He said that for the last 6 months, relations were very good, everything was smooth, but now everything has turned upside down. And finally, a typical Trump-style statement. It is impossible to believe that China would have taken such an action, but they have, and the rest is history. A bit sarcastic, a bit dramatic, as always. And then he wrapped it in one line, "Thank you for your attention to this matter." Basically, the whole tone was like this was not just a decision, but also a clear message, loud and clear. And as all this unfolded, markets literally crashed. Dow Jones fell almost 879 points, roughly around 1.9%. S&P 500 also slid 2.71%, and Nasdaq straight 3.56% down. The entire Wall Street went into panic mode. S&P and Nasdaq their worst days since April, and Dow saw its biggest drop since May. According to FactSet numbers, in just one day, around $1.56 trillion of market value disappeared from the S&P 500 in a single day. All this happened after Trump's post, where he wrote he is considering a massive increase in tariffs on Chinese imports. And he added, there is no way that China should be allowed to hold the world captive over rare earth exports. Clearly, this statement expressed frustration over China's rare earth restrictions and delays in trade commitments. And then Trump also said, now he feels no need to meet President Xi at the APEC summit in South Korea. The interesting part, stocks were still near all-time highs. Everyone was focused on corporate earnings, no one was thinking about trade tensions, and then Trump's post hit and it was a shock wave. The volatility index, VIX, literally shot up 32%, highest since June. Steve Sosnick, strategist at Interactive Brokers, wrote, that was clearly not something traders wanted to hear, and he was absolutely right. The market was calm, everyone had an upward bias, and suddenly, a free fall. Tech stocks took the hardest hit, especially AI and semiconductor names. Nvidia down 4.95%, AMD almost 7.8% down. Baird strategist Ross Mayfield said, the ramping up of tensions with China is the big story. And yes, the market was completely caught off guard. Economists were also warning tech stocks were already overvalued, so in such shocks they fall first. Jose Torres said, when you have a shock like today with President Trump, they are going to get hit the most because if the economy slows or earnings retreat, these are the most vulnerable. Interestingly, US companies linked to rare earth production rallied. MP Materials up 8.37%, US rare earth up around 5%. People bet that domestic demand will now increase. Obviously, if China restricts, the US will have to rely on itself. The bond market also saw a classic safe haven move. Treasury yields fell, gold up 1.5%, silver up 1.2%. Torres wrote, Trump is parking risk-off sentiments, and he is right, investors are moving to safe assets. Because if tariff hikes happen, both earnings and the economy will come under pressure. Oil didn't escape either. US crude down 4.2%, Brent down 3.8%, both at lowest levels since May. And this was already under pressure, as reports suggested progress in ceasefire between Israel and Hamas. Robert Yager said, this looks like a mini mirror image of what happened in April. Demand destruction fears returned. CNN's fear and greed index also slipped, from neutral straight to fear zone. All three major indices, Dow, S&P and Nasdaq, are now in negative territory for the month. Finally, Jones trading strategist Michael O'Rourke said, the sell-off has the potential to evolve into a larger correction, meaning if the US-China trade truce ends, this is just the beginning. He said all summer greed was higher than fear, and now as sentiment turns, investors seem completely exposed. Now, let's talk about Monday's impact, meaning the direct effect on India's market. Look, cues are red at the global level, so a weak start on Monday seems almost certain. Gift Nifty closed around 25,205 points, roughly 197 points down, about 0.78% slip, a clear sign that the market may open with a gap down. After opening, volatility will be quite high. Intraday swings will be big. Sudden spike, then dip, then some bounce. Wild moves are possible. Momentum stocks which were already high may face the most pressure. Sector-wise, the picture looks a bit mixed. Tech and electronics most vulnerable as the US tech crash and trade tensions hit them directly. Export-linked stocks will also be under pressure. Sentiment is weak and foreign investors may cut exposure in a risk-off mood. Metals and industrial input sectors may face issues. If raw material sourcing becomes expensive or delayed, margins will be squeezed. These sectors may feel soft in the short term. Defensive sectors, FMCG, utilities, pharma, these are relatively safe. Major drops are less likely because when risk sentiment is down, people take refuge in stable names. These segments may hold relatively better. Rare earth or related players are interesting. If any Indian company has alternate supply chain exposure or a domestic production base, there may be some positive sentiment. Speculative interest may be seen there. Rupee may also face pressure, global dollar strength and foreign capital outflows may weaken the currency. So Monday rupee depreciation risk remains. Bond market will see a typical safe haven reaction. Yields may fall as people move money from risk assets to safe instruments. Demand for gold and government bonds may increase. Investors may park their money on the safety side. Overall, Monday's market mood will be cautious, gap down start, high volatility, slightly defensive tilt. And until global trade war uncertainty clears, this nervousness will remain. So friends, that's it for today's session. If you found this analysis helpful, do like the video. This small action helps me reach content to serious market followers like you. Write your thoughts in the comment section, share your view on how much you think the market will react on Monday. And yes, if you are new to the channel, subscribe.
So, you get every morning's pre-market update and daily market breakdown on time. Also, share with your trading group or investor friends so they are also ready for the impact of global cues. See you in the next video. Safe trading, smart investment, Jai